So small business capital is a huge market opportunity, but it's also very challenging. I think we would agree on that. I think there are three big drivers of that challenge. The first is it's a highly fragmented market, and customer acquisition is challenging. We talked about the $1,000 to $2,000 per SMB customer CAC, which makes it almost impossible to serve the smaller end of small businesses because the ROI doesn't quite work out. And I think embedded is a great way. Embedding the capital product inside of the tools that customers use every day is a great way to address some of those distribution challenges. Number one. Number two is I think small businesses are not homogeneous at all. It's not a one size fits all. And so even the data around small businesses is not quite as pristine as it might be on the consumer side. And so bureau data, et cetera, is just very sparse on small businesses. And this is where I think advancements in machine learning using transactional data, Gen AI to use unstructured data, these kinds of tools help solve the problem of manually underwriting each and every small business, which costs thousands of dollars in human capital and which it doesn't let you scale. I think the third one was the one that you brought up earlier, which is around small business is inherently sort of a bit of a risky space where there's high mortality and so on. So how do you create positive selection where you have the right folks applying for capital? And I think that goes back to the trust and the relationships they have with their platforms. So if you're embedding capital into a platform, you're benefiting from the trust, the positive selection, and especially if you're in the payment flow, you're also getting the de-risking of collecting as funds come in.